What's up, you guys? I'm Carson Rouse, back with Business Buzz, where we focus on business, entrepreneurship, and investing. Today, I'm going to be going through the 3 best stocks for August of 2020. It's the best time of the month again for those of you stock traders and investors, or just stock connoisseurs who just like watching videos on stocks like I do. Today's video, I'm just going to be going through some stocks I think have a good probability of gaining you some good returns, and also are just generally undervalued stocks that you should take a look at. Keep in mind though, I am definitely not a professional, so do your own research before you even put a single cent into these stocks. However, I did pick out these stocks by hand, and I do think that they are worth looking at. Also, before we get into the video, comment down below what stocks you think are best to invest in this month, and which of the stocks that I'm about to talk about is your favorite. So let's get it started off with number 1. I don't want to waste your time. Number 1, MGM Resorts. First, let's do a small business overview. So MGM Resorts is a holding company that owns and operates a multitude of different casino resorts all around the world. Their hotels tend to be huge and boisterous and beautiful, and they offer plenty forms of gambling for those of you who like giving your money away. One of their main business segments is through the Las Vegas Strip resorts that they own in the big gambling capital of the USA. As you guys all know, Las Vegas is the heart of gambling, and they have many different resorts in the area. The Bellagio, the Mirage, the MGM Grand, and more are just some of the biggest and best casino resorts in the world that are owned and operated within Las Vegas. They've also formed a great online presence for online sports betting called BetMGM. They're actually beginning to lead in that industry, and they're really gaining traction on that site. This is great to see, especially during a pandemic when less people are going out to a physical location. They can just stay at home and bet their money online, so they can still get revenue even if the whole world shuts down again. This cash-grabbing company has been around since the late 19th century and is just an American staple. Everybody knows and loves MGM. Now let's go over some financials a little bit, and I'll talk about why I think they're a buy. So MGM is a mid-cap company with a market cap nearing $8 billion. I'll be honest, not as large as I would have thought.
That's what she said.
Their EPS has grown a lot since last year's quarterly statement. However, their revenues have been having trouble getting back on track in the last few months due to the pandemic and all the restrictions and limitations and even closings that the government has put upon them. Their gross profits have been increasing though year after year for at least the past few years, and they have plenty of cash on hand, about $5 billion in cash that should keep them alive. Even if they had to close down again, that should keep them afloat for at least the next year and a half or 2. So I would say they're pretty safe despite the situation. Currently, their stock is trading at around $16 per share, which is no bueno considering in the last year they usually trade around $30 to $35 per share. So they have gone down quite substantially, but that could just mean a great deal for you. Guys, I don't know about you, but the people around me, including myself, we just want to get out there and have some fun now. We've been locked up for so long, and people are already starting to go out and do more things. So I don't think this casino will have a problem getting their revenues back to normal or even better than ever. People are itching to just get out of the house. Not to mention the stimulus checks, people are going to have extra money to put into these casinos. You know, I do see them having a few bumps in the road, at least in the next few months, and regaining that stock price back to normal. But I think, decent midterm wise, I think they are a great buy. In the next 1 to 2 years, I think you could make some real good gains on this stock. Number 2, Microsoft. So I thought that I would try to include an obscure stock that none of you guys have ever heard of in this video. So that's why I chose to go with Microsoft. They're an up-and-coming tech stock that I see big things for in the future. They were founded by this nerd named Bill Gates. I don't know anything about him, but I'm sure they have some potential. Obviously, I'm kidding. Microsoft is one of the largest companies in the entire world, founded back in the day by one of the richest men in the world, Bill Gates. It would honestly take me like an entire video to summarize Microsoft's business model just because it is so well diversified. They make money through so many different streams without one stream accounting for too much. They make money through the sales of software, hardware, gaming, now cloud, so many different segments. It's such a well diversified company. There's even some real murmurs going on about Microsoft potentially purchasing TikTok from ByteDance to keep it available within the US so it doesn't get banned, but they still have to get approval from some of the top US officials before that can happen. But that would be a major deal that could bring in tons of revenue over the next few years at least. Microsoft started their path to dominance back in the late 1970s, and they've been one step ahead of the curve, ahead of the competition ever since. They're always innovating, and they always make the right decisions, it seems. Now let's talk about some financials and why you should buy. Microsoft has a market cap exceeding $1.5 trillion. Just for reference, just in case you don't really comprehend that, I don't think anybody really can, but just for reference, Coca-Cola, one of the most well-known companies of all time with unmatched brand recognition and just American success, you know what theirs is? 200 billion. That's a drop in the bucket compared to Microsoft. They also pay out a dividend of around 1% annually, but they do have a pretty high PE ratio of around 35. The good news though is that other tech giants are sort of facing the same thing right now. Every tech company sort of has a high PE ratio right now, which might mean that the tech industry is a bit overvalued, but let me explain. First of all, their forward PE is around 31, and I think it will continue to shrink over the next few years. Not to mention, more and more hedge funds continue to be bullish on this stock as their cloud computing segment has brought in the most revenue this past quarter. I think long-term this stock is a great buy. 5 to 10 years or more, you're definitely going to make some decent returns. However, I might wait a little bit to see if you can get it at a fairer value, so keep your eye on this stock over the next month. So right now their stock is sitting at around $205 a share, but honestly I'd put my target price on this stock for around $190 a share. So I'd just keep patient and wait for it to drop a little bit. Unless you just want to get in it right now, you can't blame you. Lastly, number 3, Kraft Heinz stock. With many of the big tech stocks flying high right now and many industries being super affected by the virus, this might not be a stock that you expected me to talk about today. However, I think this company is definitely one that you need to consider buying. For those of you who don't know, Kraft Heinz is a food company that is comprised of 2 different food companies, Kraft and Heinz. Just for 2 little examples, I'm sure you're aware of Heinz ketchup. That's like the default ketchup. And of course, Kraft macaroni and cheese. This is another large company as well with about 38,000 employees. So this is not a company to scoff at. Now let's talk about their business model. So honestly, their business model is pretty simple. I can go into deep detail, but basically they manufacture and sell different grocery products. They have great worldwide presence as well. They do this business model in around 190 countries worldwide. They have so many different kinds of products, condiments, cheeses, dairy, all sorts of kinds of food. This company has stood the test of time as well, with Heinz being around since 1869. They have the sauce. They are the sauce boss. On the other hand, Kraft is a relatively new company, but they already have great brand recognition. But anyway, let's move on to their financials. They have a market cap of around $42 billion, making them another mid-cap stock. They also did about $25 billion in revenue last year alone, and they are a dividend-paying stock for those of you dividend lovers. Also, I made a whole video about the best dividend stocks to buy, so check it out right here. Their dividend at its current stock price sits at around 4.65% right now. That is a major dividend. And the way I love thinking about it is if the stock price stays low, you're getting a great dividend. If the stock price goes higher, yeah, you might get a little less of a dividend yield, but the stock price goes higher. And this company has the cash to keep paying that dividend. And not to mention, I truly believe that this stock will rise greatly in the next year. And I don't really love to include analyst opinions in my videos, but the top analyst for Bank of America sees the stock rising 30% just in the next year. If you can even get half of that, that'd be amazing. They're actually performing really well right now, mostly due to the fact that more people are staying home instead of going out to eat. So they're buying that microwavable mac and cheese. Again, more people are staying home to eat for both health reasons and financial reasons. So that is why their stock has gone up around 22% since the pandemic. The company is still in debt, but they are making an annual profit of around $2 billion, which is good news. After taking a look at their balance sheet, I believe that they can keep their dividend steady for a long time coming and also work on paying that debt more and just chiseling into it. The stock might not go huge, but I think it is a very nice dividend stock add to your portfolio. It's a stock that can make you passive money. Thank you guys so much for watching this August 2020 stock video. Really hope you took some good advice from it. I also hope you're having a great summer. Comment down below on a scale of 1 to 10 how your summer is going and how well your stocks have performed this summer. Anyway, I'll see you guys next time.